Okay, hello everyone, and welcome to the webinar, today's special webinar coming to you from Japan and the United States in the state of Florida. We are so grateful to have our speaker today, PRINCIPE, who will be talking to us shortly about the industry of cryptocurrency and the future of cryptocurrency. And just to give a quick introduction, I am Mark Nishiyama. This channel is called Millionaire for people who want to know about cryptocurrency and the industry as well. So today we have this very special guest. Chris, I've known for over 4 years. He's such a gentleman. He's always been there for us when we needed information about the industry, and I've learned so much from this man. I'm just so grateful to have him on this webinar today. Just to give you a quick bio of Chris and his background, he's worked in the global trade industry as a consultant, exporter, importer, banker. Okay, he was a banker in New York, trainer and financial solutions provider for over 25 years. Okay, he is a futurist interested in the use of cryptocurrencies as the reserve currency for the global trade industry. Okay, and he's building a supply chain powered by none other than blockchain technology, okay, to increase the speed, compliance, and security of our trading. Okay, a former banker of New York, he is the premier authority on cryptocurrencies and financial markets presently. Okay, he's the owner and publisher of Financial IT Magazine and FinFuture Magazine. Okay, and we're just really glad to have him on. Chris, if you can unmute your mic and say something to us, to the people, just welcome to the webinar.
Mark, thank you very much. That was very generous introduction of me. Really, I'm looking around to see who you're really talking about. That was really nice. Thank you. But I'm really pleased to be here. I want to thank you so much for inviting me. You know, our friendship does go back a lot of years. We've had some great conversations on these topics over the years. And even more so, I'd like to thank every one of you who have taken your time to join us today for this webinar. I hope to find some really interesting content for you. I'm going to be giving you some of my views, some of my opinions. One of the things that I will not be doing is really going into any specific names of cryptocurrencies. So, there'll be a couple, but what I clearly want to say is I'm going to give you my views, my opinions, things that you might want to consider, but I'm in no way giving you investment advice. Okay, and that was for New York securities law, okay?
Okay, fantastic, Chris. Okay, so I prepared a few questions for you. I think we went over them before, and I think this is something that everyone is probably interested in terms of our industry. It's a very exciting industry. A lot of things happening every day. I watch some YouTube videos of guys doing it every day, and I learn a lot from them. But let me hear from you. Right now, Bitcoin, it's used as a means of storage of value. Means that, you know, people invest in it to keep their money virtually safe. Okay, but do you see it going towards another 10 times, like $100,000? Because right now it's at about $10,000, and it started from like $1, even 1 cent. Do we see a possible $100,000 Bitcoin?
Well, you know, Mark, I mean, this is certainly a big question, a question that comes up very frequently for a lot of good reasons, because a $100,000 Bitcoin would be a big windfall for a lot of people, of course. So, you know, for me right now, I'm actually home in Florida. As you know, I travel a lot. I'm home, you know, 4 or 5 days a month. So I always like to say I come home for vacation. So I thought it'd be nice for everyone that I'm sitting in my backyard on my deck with some of the beautiful Florida foliage and greenery in the background. But to get to this question, I want to back up and just start on a few things, okay? I think the origin of Bitcoin is a bit important here, because it was really looked upon as something to be an alternative to fiat currencies, in other words, dollars, yens, pounds, and to be a way of transferring very quickly, very efficiently, and very inexpensively funds between two parties, and to be able to do that in a highly secure manner without a third party, a bank, being involved with it. So that's really what the original application for this new means of being able to move value. Now, it has become a very effective, in many ways, storage of value. As we've seen, I think there is a huge part of the community that do believe in the hold approach, which is, let me gather now, let's hold. And in many cases, depending on when you first started getting involved, you've either done well, or right now you're still waiting to see what is going to happen. This past, I guess, about 6 months or so, we've seen a more than 3 times gain of the value. So in a lot of ways, that hold strategy is paying off. So I do see it as a way to hold your value outside of the traditional stores of value, which is really your banks, right? Or the stock market, or in other securities or assets such as real estate and these things. And certainly if we go by this year, the return on investment, your ROI, the percentage is well past any of those other things. In fact, as we've seen in many countries, Switzerland, Japan, several other countries, that your banks now are working with you in a negative interest rate state. So in other words, you're paying them to hold your money. You're paying them to protect and hold and store your values. So not the best situation when we're all looking to make money. Now, as far as what I see as the future, and it's right now, it's very difficult for me to say and feel that the value is going to reach 100K. We have a few markers that need to be met and passed before we can really start considering that kind of rise in the value of a Bitcoin. We've already passed a few barriers. We were in the 3,000 range. When we passed not so much the 5,000, but the 6,000 range, that was a very good indicator. As we saw, that indicator continued, and we broke the 10,000 per coin range, which was another very big indicator that the value was there, the strength was there, and more importantly, the interest in the community was there. Because again, this is and if we look at it by the way many governments, especially the U.S. government, looks at it, that a Bitcoin is considered a security, which makes it the same classification as a stock, or more, to put it more bluntly, it's a speculative investment. Okay, so when you look to invest in things that are speculative investments, there is always the chance that you can get good gains. There's equally the chance of taking good losses. So it's the old saying, Mark. The bigger the risk, the better the benefit. And that's the kind of the situation we're in. So I saw it as a very strong indicator when we passed the $10,000 mark, and that's held pretty steady now for quite some time. I think until we see it really do another big lift, and right now, in my view, I see some of the things coming together that are indicators that we could start edging up to that $15,000 mark, which would be, to me, the next barrier that we would need to break so that we would see the continued movement of higher value for Bitcoin. And of course, some of the things, and you actually mentioned some of them in your in what we talked about, you and I talked about earlier, the ongoing global trade issues that go on. I tend not to look at this as a war between China and the United States, for instance, or between the Eurozone and Great Britain and these things. You know, these are business issues. Business issues get sorted out by businessmen, and they get sorted out in a way that you know, everybody can end up making some money. And that's kind of the state we're at right now. You know, there's a little bit of imbalance, and business itself will bring that balance in, despite the politicians. And I'm not a big fan of most of the politicians out there, neither now nor in the past, and I would dare to say I won't be in the future either. I'm a real believer in businessmen conducting business. That's what really makes the world go. So once we can get past that $15,000 mark, I think that we'll see some faster rise. Of course, the biggest barrier we have, in my view, is that $20,000 mark. And I'm sure many of us remember that the end of December, the second week in December, when Bitcoin actually touched upon it for just a little bit before we saw some pullback in the market, that actually really pulled back the market much more than I think anybody that follows the industry really expected. So it is very comforting now to see that we're very solidly holding at that $10,000 mark. I do believe that 15,000 is within range, and the $20,000 mark for the Bitcoin value, I think, will be the most telling number that we'll be able to see right now. The other nice thing, of course, with the $20,000 mark is that there are certainly a number of people out there in the market who bought at the end of November, beginning of December of 2017. So right now, they've either done one of two things. They've liquidated and taken losses, or they're still holding. So once it reaches 20,000, those people now are in the black and out of the red. And I think that in itself will be a mover for the industry. But back to your question, $100,000 Bitcoin, and I know I've seen some people that I highly respect who have used numbers bigger than that. Is the potential there? You know, it's a supply and demand market, right? And it's one of the things with Bitcoin is the supply is limited, and the demand, I think we're still in the very early stages of demand. But the key, in my view, to being able for Bitcoin to make those kind of jumps in value is going to be usability. And right now, usability is not there. I know that I'm looking forward to some of the other questions that Mark has, so I'm not going to touch as much on usability right now because it's an important topic to me, because I think it really is very telling about the industry, and we'll get to usability. So I would say that that right now is probably a time where you'd want to consider putting a portion of your assets into Bitcoin. I think that that we will see between now and the end of the year that the price, I believe, will get and break that $15,000 barrier. I don't think that we can reasonably hope for it to hit the $20,000 barrier. But then I'm a little cautious at the very end of the year, and I'm cautious for several reasons. Is that at the end of the year, of course, the amount of assets that you have in most countries at the end of the year become taxable. So I think you'll see some of the bigger holders liquidate some portions in advance of their tax liabilities so that they can reduce them. I also look at some things just that are part of normal life, Mark, and those things are the holidays, right? So you have Christmas, you have Hanukkah, you have New Year's, you have many of those things, and people need money for those things. I mean, you have to buy your kid, the newest, latest, and greatest toy out there, and I think that you will see some portion of people who will do some liquidation of their Bitcoin assets so that they can have a better than average Christmas, particularly if we do get up to that 15,000 mark or so and people have made some profit. So I'm a little bit concerned that we may see some repeat of the end of 2017, where as it gets close to the holiday and the end of the year, that those two reasons will see some sell-off and probably some reduction in the price. But I think that 2020 is going to be different than 2018 in the fact that that price, I think, will rebound. And my opinion is that by the end of the first quarter, beginning of the second quarter, I'm really very hopeful that the $20,000 barrier will drop. We'll pass it, and we'll be able to keep moving on from there.
Okay, fantastic. Yeah. Well, while we're on the topic of Bitcoin, we can also talk about altcoins. And I guess right now the altcoin is pretty much suffering, and they're not like really selling so well. The Bitcoin dominance is still at about 71%. So Bitcoin is still the main coin, but we see a lot of movement with industry now creating coins, especially Facebook with their Libra coin and Walmart with their stable coin. And they are coming up against a lot of resistance from the US government. And they are trying to be a dollar-based cryptocurrency, which is actually an interesting way of creating a cryptocurrency. I would like to know what your views are on like Libra coin, because that's a big topic actually, or was a couple months ago, but I think it's something we should address.
Yeah, no, absolutely. It should be addressed because I find it, personally, I find it really interesting because it does follow a lot of things that we've seen over the years, although now it's kind of morphed into something a little bit different. So I actually want to backtrack just a bit, Mark, because first of all, in any industry, I don't care if you're making cupcakes or you're making tires for the cars. If you're the first one in the business, your name is going to be the best. You have the brand dominance. You're going to have X amount of the market share, and people are going to have X amount of additional confidence and comfortable feeling about the first, the leader, the one who started everything. And that's the position of Bitcoin today. So people that are just learning, and there are a lot of people that are still looking to gain as much education as they can about this and see what it means to their future and the future of their families. I think their first level of comfort is going to be in Bitcoin, which is why we've seen the price of Bitcoin stay and hold and continue to grow on a almost daily basis, up and down, up and down. That's the dominance that you get when you're first and you're the most well known. Now, if we talk about number two just for a second, which for most people will recognize Ethereum, so Ether. It was very interesting for me in that when the ICOs started, and the ICO, let's call it even the ICO craze started, where many companies went out there and put together some very interesting projects, many more that weren't as interesting, but I think people got caught up in the hype. I really expected, from my view, that Ether would do and perform better than it has. And I base that on looking at the industry and looking at a number of the projects, particularly the projects that I felt were valuable and solid projects, and that Ether was the main currency. In fact, I think they like to call it gas, right? Is the main currency that a lot of those ICOs were based on. So when I looked at that and I said, okay, when some of these ICOs become real projects and become real products and become usable in the market and people start being able to take advantage of some of the good ideas that are out there, that being Ether based, that should increase the value of Ether. And I have to say, I wasn't correct on that one, at least not yet. So I wasn't correct on that one. We haven't seen Ether really bounce back the way that I thought. And I think one of the things that contributes to that is that there was a high percentage of projects and ICOs that were two things really. Many of them were designed not necessarily to be good projects. They were designed to be good ways for those people in charge to make money, which it's very bad for the industry. I'm glad to see a lot of that is gone. We really need to be able to put some stronger guidelines in place so that those things can be prevented in the future. And then there's also a lot of projects that sounded good, but they weren't able to be executed, number one. And number two, as you mentioned, one of the things that I'm fortunate enough to do is to do some consulting. And I get called in to see startups, see young companies. I have a very good friend of mine who works for a big venture capitalist fund based out in Silicon Valley. And he has me go out there twice a year. And in 2 days, I will see typically between 10 and 12 new young startup companies. And it's, for me, very, very interesting and very exciting to hear these young people, and some not so young. There's some older people with still some good ideas, but to see these people and listen to their ideas. But I always have one main question, my first question is that, hey, what you're showing me, it looks really neat and everything, but what is the business problem that you're solving? And I would say that if I see a dozen companies, 9 of them can't answer that question. Their answer is more, this is a great idea. We've got great technology behind it. When people start to see it and start to use it, they'll love it, and everyone will be on it and everything. But what's your business? How are you going to help people in their daily life? What's the business benefit for them? And really, if you can't answer that, you're going to have a very hard time, being able to put together a successful business. So this is some of the things that we saw and we still see that have gone on and have I think really held back Ether from becoming a much more stronger and more valuable asset than it is today. So now let's fast forward on to your question after going through a little bit of that background, because it's kind of interesting today also. The announcement from Mark Zuckerberg of Facebook of Libra, I thought was very interesting. I think I spent 2 days just reading everything I could possibly read about it, because what is this guy doing? Because he's capable of so much based on just what Facebook is in terms of a community. I mean, when you start talking about any kind of group, club, network, organization, they don't get any bigger. So the power there is huge. And my conclusion was he did a really good job of picking a really good time to do an excellent job of marketing. Not to say that he's not going to do Libra or is not interested in Libra or is not invested, because they've spent money on it. Let's face it, Facebook has the assets that if they want to put Libra out in the market today, they've got the technology. Their technology department, might be bigger than IBM's, okay? They've got the technology and people to do it. They've got the money to do it. If they need more money, the market The straight, everyday stock market will throw money at them. Investors, VC funds, mutual funds, they'll all throw money at any idea for Facebook right now. So it's not a liquidity issue, which is what you get with a lot of other coins where there's not enough money to balance out the buys and the sells. That's not an issue for them. I think that they did a very good job of coming out with this to put everybody else on notice that, hey, we're Facebook and we can do this within our own community, which is humongous, and we can do it anytime we want. Now, they won't do it right now, and this is another topic that I speak about a lot and that has a lot of bearing on everything, is they won't do this for the same reason that you don't see the banks doing it today. I don't know if anybody remembers, but back in April of 2016, Citibank announced Citicoin. It was a big announcement at the time. Now, again, Citibank has the financial assets to put out any cryptocurrency, have the liquidity on their own, be able to buy and sell, be able to put it out into the market. They have the IT staff. They again, most of these huge banks are really big IT companies. They have more IT personnel than Microsoft or IBM. Or they're huge when it comes to that. So they have the technology capability of doing it. So when they make this kind of announcement, it's an announcement for the market. And it makes me think also of JP Morgan Chase when Jamie Dimon came out and said that, Bitcoin's a fraud. And the next day, as everybody saw in the paper, JP Morgan Chase, the bank, bought, it was $76 million worth of Bitcoin. So also let me mention that, of course, after Jamie Dimon said it was a fraud, the price dropped. So it might be a little bit of timing involved there that I think is questionable on their part. Anyway, the point is that none of these big companies, big banks, other governments right now are going to get involved with issuing their own cryptocurrency until there is some regulation in effect. Unfortunately, today, if we look at global trade, the US dollar is more than 80% of all the trade that's done in the world. The next 5 currencies, yen, euro, renminbi, and so on, they make up about another 12% of the market, maybe 15% of the market. So the U.S., unfortunately, dominates, and I know my American banker friends hate it when I say it, but it is it's too big a percentage of global trade in the hands of the U.S. dollar, which causes a lot of effects, including allows the U.S. to do some things that I think in certain circles they shouldn't be allowed to do, but they do, right? Now, what that really means is that if you want to do business in the United States as a bank, as a financial institution, as a company, that in effect, even if you're a French company, or in fact, we'll use a French bank, BNP Paribas. BNP Paribas is one of the largest banks in the world. They are the biggest bank in France. When they do business in the U.S. not only under the name of BNP Paribas, they also own Bank of Hawaii. They also own Bank of the West. There's several other brands that they own. So when the U.S. didn't like the fact that the BNP Paribas was doing some business with Iran, they basically said to BNP Paribas, either we'll pull your banking license or you have to pay a $10 billion fine, and the bank paid, okay? So the point is that regulation right now is still the big unknown. It's still the big deciding factor, and it's still what is holding back the ability for companies like Facebook, banks like Citibank, companies like Walmart's, countries like Canada, who has already all the documentation, all the processes in place to do CAD coin, which is what their crypto is called. It really is holding back all of that, and I think that that we're going to see coming in 2020 some more guidance out of the different areas of the U.S. government when it comes to cryptocurrency. Hopefully that they will look to allow this really wonderful technology and ability to grow and to flourish and to benefit. Well, of course, it needs to benefit the U.S., otherwise they wouldn't do it, but benefit everybody in the world. Because I'm really a big believer that a single valuable cryptocurrency used in global trade, when countries and companies are doing business between different regions and different economic zones, that cryptocurrency can absolutely cut costs, speed things up, make business a lot easier, which should in turn help every one of us with cheaper prices at our stores.
Yeah, today I saw something in the news that said that to make paper money, it costs some countries 0.5% of their GDP just to print money. That was just ridiculous. It was just so much money when you think about it. Yeah.
Well, Mark, let me interrupt you just for a second, because this is something that I've done a little bit of work on. Here in the U.S., paper money, we'll forget about coins because that's a different organization. That's the U.S. Mint does the coins. But the Federal Reserve banks print the U.S. currency, right? So a couple of things is in 2018, the U.S. government spent $743 million just printing U.S. currency. And by that, I don't mean buying machine or anything. I mean, that's just the paper, the ink, the design that goes into it. That doesn't include the amount of money and security it takes to move that money from the Federal Reserve Bank to all the other banks. Because remember, the money system, it works like almost like a farm, right? I have a farm, I have 100 cows, right? And my cows are producing milk. Well, I don't go to Mark and say, Mark, here's some milk from my cow. No, I package that milk up into gallons and I send them to the supermarket, and then you buy from the supermarket. The Federal Reserve Bank is the farm. They're the cow producing the milk, and they're sending that milk packaged up to the banks, who then distribute to us. So that's how it works. So that's one figure. It's a huge amount. If you could take 20% of that and make it into a digital version of the U.S. currency, right? Off the bat, you're talking about a savings of $150 million. It's huge. And see, to me, that will be one of the main reasons that governments will start going to cryptocurrencies and digital currencies. The savings is just too huge. Okay. The other interesting thing is, you know me, I like business very much, and I'm always interested in how business works and how do people make money doing certain things and everything. So when I look at the U.S. Federal Reserve Bank and I start looking at the numbers, to produce a U.S. $100 bill, it costs them 5.6 cents. So less than 6 cents per bill. And that bill's worth $100. I mean, can you think of a business with a better profit margin? You know, it's just incredible. The other thing that I think people don't realize too is that if you had $1 million US in $100 bills, right? You just had a stack of $100 bills that equaled $1 million. It would weigh 10 kilos, and you could put it into a Macy's shopping bag, and you could walk all around town. Nobody would even know you would be carrying $1 million. So there's really interesting facts out there about money. In the U.S. Federal Reserve System, there are 24 different printing press lines for making money that are spread around the U.S., the country, that are spread around 24 of them, and they are running 24 hours a day, 7 days a week, no holidays during the year, and they're right now able to produce $800 million a day, and they produce $800 million a day every day. So you really have to start saying to yourself, what's the value going to be? The value today is only the value that they have us believing that it is. So it's going to be very interesting to see in the future that, for me, the two main things that are going to get governments to go to cryptocurrency, besides regulation has to happen, is the cost savings. And then the other important thing that we need to remember with cryptocurrency is the security involved. So you will be able to do a much better job on being able to eliminate bad players from the market. You'll do a better job on being able to eliminate criminal activity, because it'll be harder for them in the crypto space. Now, right now, Bitcoin gets a big, and in some ways is deservedly so, reputation for being the money of criminals. But the real fact of the matter is physical currency, dollars in your hand are a criminal's best friend, okay? I mean, if you lose your Bitcoin, there's some trackability. If you drop a $100 bill on the floor, even if you know the serial number, you're not going to get that $100 bill back. So with the criminal organizations right now, physical money is still their best friend. And I think the more we reduce physical money in the world, that we'll see again some reduction in the ability of criminals to be able to benefit from the illegal profits.
Yeah, Chris, that's an interesting point you make, because a lot of the anti-money laundering lobby against cryptocurrency is saying that cryptocurrency is going to be used by the criminals, whereas the US dollar is pretty much 80% of all of the money laundering anyway. So it's kind of an excuse for not taking a step forward and going to the digital world. And I hear a lot of people talking on one side and a lot of people talking on the other side, but I think it's going to take a little bit more time maybe, but maybe you can shed some light on the ICO coins. We have, maybe it's a little bit less than it was before, but now I think there's still more coins that come out, and there's so many that, I can't follow everyone. And I'm sure everyone does have a good, like you say, business problem to fix. But what is the reason why all these ICO coins fail? Because I've seen so many fail, like 800 in the past year. Is there some certain reason? I don't believe all of them are scams. I believe some are just bad management, bad financial planning, stuff like that too. I'd like to hear your opinion.
Well, Mark, I agree very much with you, and I think that there is especially early on, a huge percentage were scams. I think that there were a huge percentage of people that were just, saw the opportunity to make some fast money and did that. At the same time, and when I mean huge, I don't mean 90%. I mean, to me, huge. If it's 30 or 40%, that's still a huge amount. Okay, so if you look at 60 or 70% of the projects, it's very interesting. Is that again, when I get to sit down and talk, and a lot of times I'll be invited to events to speak or to be on the judges panel to judge startup companies as they make their pitch to a series of us judges, and then we'll evaluate them. That there are some great ideas, but a great idea also needs the experience of solid business management. Okay, and that's where a lot of these companies fail. So I see two things. I see one thing where you have young people who have good ideas. They've put together something that solves a business problem. Even some don't, but solves a business problem. And then you're talking about kids that let's say don't have much in the way of assets to begin with, and all of a sudden they do an ICO, and all of a sudden they get $20 million dropped on them. And then it almost becomes, well, what do we need to do the project for? You know, I don't think that, I think that's a small percentage, but that, you know, that's kind of what happens is not so much is that they lose some of the motivation, and they lose some of the motivation to learn how to be business people. Okay, and then that's what happens. It's not necessarily that all of a sudden, you know, they're you know, looking to float around in the back of their pool drinking martinis or something. It's, you know, they lose the motivation to continue to learn, and to learn really the harder parts of the business. You know, we've seen many good ideas, and good ideas, you know, they're not easy, right? You know, somebody, you have to really think about it and everything, but it's much harder to implement that idea. It's much harder to execute that idea. And that's where you need the business experience and the knowledge. The other area of it is that most of these people, the younger people, where they really need help is on the financial side. You know, how do I do my accounting? How do I manage my books? How do I make sure my expenses are in line with my revenues? How do I get a loan? How do I get a credit line from my bank? How do I, you know, they don't teach these things in school, and they should, but they don't. And they come out and they make mistakes, and, you know, they tend to overspend. They tend to think that, you know, we'll be able to you know, get, you know, a beautiful office, and a lot of times that's not really the right way to go about it. And then I think also you get situations where they'll bring in some experienced people who, you know, are used to being parts of big companies, so they're used to spending money on marketing because the company they worked for before had 20 people in marketing, but this is a startup that has, you know, 20 people in the whole company, and these kind of things contribute to the failure of a lot of these projects. You know, so it takes much more than just a good idea. It takes the ability to manage your business responsibly within your budgets and your expense and revenue income and outflows.
Okay, great. You touched on the topic of usability, so let's kind of gravitate towards that right now. As we know, you know, volatility of, like, say, Bitcoin is one of the main reasons why merchants do not, you know, get into Bitcoin. And what is the benefit of getting Bitcoin if it's going to drop in value? So how do we create a cryptocurrency so that merchants don't lose money, and, you know, can guarantee that, you know, their value will be there when after the trade is done?
Well, there's still a few things. I mean, there's still some things, Mark, even before we talk about that on the technology side, is that you still don't really have a usable, or not even usable, but a cryptocurrency that has the ability and technology to work as fast as a credit card, right? We're just not there yet. This is still new technology when you think about it. You know, you got to remember that, for instance, the ATM machines are already 52 years old. People don't realize that, but the first ATM machine was 52 years ago. You know, and now you're looking, and yeah, you got a video screen, you get all this, right? So it takes time to develop the technologies, and that's one of the issues that we have with cryptocurrencies, is that they haven't been able to. There are some very good initiatives out there. I could name a few that I like, that are now being able to start doing the speed. But, you know, you have to picture the normal everyday life. If I go into Starbucks for a cup of coffee, and I'm paying for that cup of coffee with Bitcoin, and the transaction is taking 10 or 12 minutes, you know, what's going to happen to the people behind me? They're not going to be too happy with me. Right, so that's one of the issues. Speed is one of the issues that we still have for most merchants. It works, of course, much better online when you can use your cryptocurrency and you can pay online, where you're not holding people up. That's one of the things. The other thing that you touched upon, of course, is the volatility. And even with, again, we'll use the coffee scenario. So I go in, I buy a cup of coffee with Bitcoin. You know, it's easy enough to say to that merchant, oh, you know, hang on to it. If it goes up overnight, or if you hang on to it for a week or a month and it goes up, you will make more profit. The problem for most of the smaller businesses, of course, is that if I don't get money today for my coffee, how do I buy more coffee tomorrow so I can sell coffee tomorrow, right? So that becomes, so they can't do it. Now, I know one company, and I'll mention their name because they've put it out in public. For one of the very first companies to accept Bitcoin was called Overstock.com. Okay, and I know the owner and the CFO very well. And when I went to visit them, I sat down with Michael, who's the CFO, and I asked them, you know, because this was new, that they were one of the first to accept Bitcoin. And I asked him about it. He said, when we accept Bitcoin, part of it was really as a marketing strategy. They wanted to be first. They wanted people to recognize them as a leader. They wanted people to see that they were looking to be ahead of everybody. So part of it was a marketing strategy. He told me that about 6% of their sales were in Bitcoin, which is not tremendous, but it's a nice piece of business because, you know, they're not a small company. But what he did say is that as CFO, anybody working in my treasury department, my financial department, if we get a transaction in of somebody buying a chair with Bitcoin, we convert that Bitcoin immediately to the currency of our choice. He said, if I find out that anyone in my department holds Bitcoin overnight or for a day, he says, I'll fire them, because we work on very small margins. We're an internet company. We work on small margins, and it's just too easy to lose their profit margin if Bitcoin even goes down, 1%. So I think that we see a lot of companies that operate this way, and I think it's a fine way to operate. It's in some ways mirrors what happens in the fiat currency markets, where companies will accept a currency like Korean won, and they'll get paid in it, and then they'll have their bank convert it right away to British pounds or euros or dollars. It's really the same principles that you're operating on. So that's one of the things that we see. So to really be able to have the usability, which is in my mind the key to general acceptance of the public for Bitcoin, is that it needs. You see, I have a hard time seeing Bitcoin being that currency, and again, the reason is because so many people look at it as a way to profit from it going up and down. Everybody thinks that you only make money going up, but of course there are very, very experienced people out there that know how or when, or think they know how and when to short the price of Bitcoin as they short the price of stocks. So they see Bitcoin hits 10,500, and they say, hey, you know what? I think overnight it's going to drop down to 10,100. So I'll put an order in at 10,100, and I'll make myself some profit overnight. So I don't see that changing with Bitcoin. I think that the answer to usability is really going to be one of two things, three things. What Facebook and some of the other companies are trying to do by having a coin or token that is controlled by them, which to some purists already goes against the idea of cryptocurrency, but have it controlled by them, where they can manage the supply and demand, and they can manage the liquidity so they can hold the value. That will be one of the things that will make it very important. When somebody knows that a dollar of Bitcoin today will be worth a dollar Bitcoin, or I shouldn't even say Bitcoin, but a dollar of a particular coin or token is going to be worth a dollar of that token a month from now or 2 months from now, then there's a whole different confidence factor that comes into the market, and people and merchants become much more comfortable with using it. So I think some of the future of usability is going to be in these what you could call coins or tokens that are on private blockchains, right? So there's still the consensus, but the blockchain is not open to anybody being part of that consensus. And you're going to find this with the banks, with big companies, and with governments. They're just not going to allow for there to be general consensus. They're not going to allow the access for anybody with a computer to be able to come in and verify a transaction. There's a security risk there, whether it's in reality or it'll be in perception. It's just the sound of it for most of those people in government, banking, and big companies. It just sounds like, they have access to our system. That's a security risk. So I think when we start looking at where usability will happen, it will happen where there is controllability of the supply, the demand, and the liquidity factors for a token or a coin.
Okay, that's an interesting point that you make with the usability, because everybody's wondering, okay, what's the next big coin? What's the next currency, cryptocurrency that's going to break through? I mean, is it going to be Libra? Is it going to be, so and so coin? That's the big. Do you see a future? This will be my last question, but do you see a future of having multiple coins that will be usable, and like depending on what geographical location you are, will be using, or will you see like one strong currency like the U.S. dollar, dominating the whole industry and everybody else?
Well, Mark, I think this is a great question, and it's a great question for us to finish up on, because it really kind of pulls everything together. So back in 2013, I guess I got really, really interested in this, especially looking at it from how it can help global trade, because that's my international trade is where my whole banking career has been, right? So it's always been very important to me on that aspect. So for me there's two things that I look at. If you look historically, exactly what happens in the world today with fiat currencies potentially can happen with cryptocurrencies, right? So today in fiat currencies, we have any number of currencies out there for any number of countries. Now, the U.S. dollar, again, I think controls too large an amount of global trade. I would personally like to see that get reduced, and some other currencies be able to take a stronger role. But you have a number of countries, for instance, Ecuador, Panama, who are dollar-based. Cambodia, dollar-based currencies where the dollar is accepted, in the streets by the street vendors, even. So I can see the same kind of things happening in the crypto world, where you will have different cryptocurrencies based from different countries. And of course, there's two reasons. I think one is that look, governments and even people, they're proud of their country. They're proud of the establishments of those countries, and your currency is one of your identifiers, so to speak. It's one of the, a great example is that when they formed the Eurozone, that the biggest sticking point. Now, of course, the UK is leaving now, right? But one of the biggest sticking points, if everybody remembers back in the 90s, that held the UK from joining the Eurozone to begin with, is they didn't want to give up the pound. and they didn't want to switch over and use the euro, and they ended up working out an arrangement where the pound stayed in existence, and that was just based on British pride, let's say, for the pound. That was their mother currency, and they didn't want to change it. So I could certainly see that a lot of countries will not want to give up. I don't think that, for instance, Russia will want to use the same exact cryptocurrency that the U.S. uses, or Canada uses, or even China uses, and so on. I don't think you'll see that. What I do think is the best possible solution, in my view, and again, I've given this a lot of thought and talked to a lot of people, is if people are familiar with the IMF, the International Monetary Fund, right? They do things, they have what they call a basket of currency. Excuse me. They have a basket of currency. And actually, just a couple of years ago, they added the renminbi to it, which was the first non-free floating currency, as they say, added to the basket. But the renminbi has become such an important currency, it has to be part of the basket. And I think that was a good decision. But I think with cryptocurrencies, I think that there can be a basket of these cryptocurrencies that has a different cryptocurrencies, but has an equalizing value to them, so that there is a standard of what the crypto ruble would be to the CAD coin from Canada, right? And that I think is a scenario that is likely to play out based on the regulation. I think, again, because when you do a basket of currencies, it's always going to be weighted. I think the U.S. is still going to have a stronger position in that. I'm not saying that that you could do equal anyway, because you can't make the South African rand an equal currency, because there's just not enough of it and not enough use of it, right? So there has to be the basket has to be weighted. But I think the weighting, there's a chance now with different countries, especially the bigger countries, as I mentioned, Russia's a good example. The Eurozone may come out with their own. China, of course, is preparing their own. Japan, I think, will be a player with the US. I think that Brazil may also be a player. I think that we'll be able to see that the weighting factor will not be as heavily leaning towards the U.S. as we see today, where it's a little more than 80% of all the trade that goes on. So my hope and my belief is that as we see regulation and governments getting more comfortable with the benefits and the value of cryptocurrency, because there are tremendous benefits and values, as we've spoken about, that they will move to a system where there'll be a weighted, leveraged basket of these cryptocurrencies, so that everybody can be able to trade on equal footing.
So, in your opinion, basically, we will have a few players. Is that what I can take from all this?
I don't really think layers is the right word, because
players.
Players. Yes, there will definitely be players. Now, my ideal would be is if there was an independent cryptocurrency that would be out there that does use true public consensus, and that cryptocurrency would be usable and be acceptable in replacement or in addition to fiat currency anywhere. In other words, where, for example, Panama, you can go there and you can spend colones, which is their local currency, or you can spend dollars. That you can go to a country and you could spend the local fiat currency, or you could spend that one particular crypto. to me, the idea of one global crypto is the ideal. That's crypto nirvana, if we want to call it that. But the success in our world history of getting everybody to agree to one thing is difficult at best, and has caused, I think, much disruption and wars at the same time. I don't expect to see us go to that extreme here, but really, if there was one cryptocurrency that could be in the hands of the people, monitored by regulations so that we keep the bad elements and the bad players out, that would be the most effective, most inexpensive, and most available method of storing value and moving value. And just one thing that we didn't touch on, Mark, I just want to hit really quick, is that, in the world today, it's something like 1.5 billion or 2 billion people that they consider the unbanked, right? These are people who don't use the banking system, don't have bank accounts. And I've had this argument all the time. The banks and the credit card companies all look at that 2 billion people as their next big market. And we're really talking about people that, maybe they make between $50 and $200 a month. And for the banks to want to get them to use services that they don't need and charge them fees, and for the credit card companies to get them to use and take out credit they can't afford and pay 2 and 3 and 4%, to me, is criminal. I think it's just stealing from the poor in its most blatant sense. The truth to me is, and I've had this on stage where I've had people disagree with me. The truth is, the unbanked today do not need banks. What they need is, they need a fast, inexpensive way to pay and get paid. These are not people that are going to take out car loans. These are not people that are going to buy life insurance. These are not people that are even going to be able to get mortgages for their houses, right? They don't need banking services. They need a fast and inexpensive way, free even, way to pay and get paid. And one global cryptocurrency would absolutely do that.
Okay, so that's great. Okay, that's good to know. There's some flexibility there, because people get all nervous about having just one big one. And is it going to be Bitcoin? Is it going to be Ethereum? Is it going to be this, that, the other thing? Okay, Chris, thank you so much for your time and your insight and your knowledge about the industry. I just really, really appreciate it. I think everybody here wants to give you a big hand. I'll give you a big hand. If you're there, turn on your camera, give them a big thumbs up, because Chris is the man when it comes to this industry.
Thank you
and
so much.
Thank you for that beautiful background, that the forest back there, because last time we tried to do this webinar, we had Hurricane Dorian. And
that's right.
Everything is back.
It wouldn't have looked so good.
Yeah, it looks very good. I had imagined the worst, actually, because when
you can understand, Mark, when I know I've said this to you before, because I travel a lot. I'm home maybe 5 or 6 days a month. I go home for vacation.
Yes, that's right. Yes, Chris travels a lot. Let me tell you, he's a very busy person. We were so fortunate to have him on today and catch him at the right time. And I believe he's off to another part of the world.
Yeah, actually, tonight I'm heading up to New York just for tomorrow, and then on Friday I'm going to Alaska.
Alaska, wow! And
yeah, I've got I'm consulting to a bank up there in Alaska, which should be interesting. But I'm really glad it's not December.
Yeah. Well,
so Mark, I really want to. For me, this was really a big honor to get to spend some time with you and the audience that you have. I hope that a little bit of what I said was helpful. A little bit of it was interesting. I can tell you that I had a lot of fun, and I'm available to you anytime you need me. It's always a pleasure to get to spend time with you. Thank you.
Thank you, Chris. And we want to do this again.
Great.
months down the road, a lot of things will change in our industry, I'm sure. And it's so dynamic. It's always changing. And we always need to be up to date. And I think that, you know, you are the one, you're the chosen one to actually enlighten all of us. So I just really appreciate this today.
Thank you.
Okay.
Thank you.
Take care. And it's 8 a.m. where Chris is, or 9 p.m. right now, 9 a.m. So he got really early to get this webinar done with us. So.
My pleasure, Mark. Anytime for you. Anytime.
Okay.
Thanks,
super.
Chris. Thanks, Mark.
Great. Thanks. Thank you, everyone.
Okay. Take care. So
Bye-bye
that's
now.
from us, Crypto Millionaire. This is our first series of videos. We're going to have more, obviously, and just stay tuned and get the latest information from the cryptocurrency industry. So Mark Nishiyama out, and thank you again to our super guest, Chris Principe, and we'll see you next time. So please like and subscribe. This is going to be on YouTube as well. And we'll have better content for you each time we do these webinars. So stay tuned, and we'll see you soon.
Thank you, Mark.
Thank you.